On Monday, we talked about it's a really big week, but we're obviously on a short week with the 4th of July. So happy 4th of July. Hopefully you guys stay safe this weekend. What I want to talk about is ADP Jobs Report. So a big component of what we're looking at here as far as the Fed cutting rates is Jerome Powell is looking at two things. Number one, is the tariffs going to bring obviously more inflation? But number two, what obviously would be inflationary is the jobs number. So are there a lot of jobs in the market? What's going on with the unemployment rate and everything like that? So today we got the ADP numbers. Tomorrow we're going to get the BLS Jobs Reports. ADP number came in extremely low. So there was actually a loss of 33,000 jobs. They were expecting almost 100,000 jobs to be created. So as far as the bond market, or as far as interest rates getting better, this is really good. Now, they don't put a whole lot of weight on the ADP side of stuff. Their big report is the BLS one, which is going to go ahead and come tomorrow. So we got to take a look at a couple different components. Number one, why, if they go ahead and cut, or if they decide to cut, or when they cut last time back in September, what was going on? And I kind of want to break that out for you guys so you kind of understand what we're taking a look at here and what to expect kind of moving forward. So first things first, we want to talk about the trends. We're taking a look from basically 1970 all the way through right now. And if you take a look at it right up top here, this blue line is the Fed funds rate. So basically what we're trying to get Jerome Powell to do, which is drop the Fed fund rate. And you can take a look at the green line and the orange line. So 30-year mortgage rates and also the 10-year treasury basically coincide and follow this. And for the history of time, it looks like it's pretty much been the same the whole time. So when we take a look at this, really basically back in September when they cut a half a point, and then what is going on with the economy now, let's dive into that. When we dive into this, this is interesting. So we're taking a look at the Fed's fund rate, right? And then we're saying, hey, there's green line on mortgage rates. Why are mortgage rates staying so extremely high when the Fed fund rate is coming down? And the 10-year treasury is obviously a little bit higher than the Fed fund rate as well. Why aren't they following each other basically from September of last year through right now? And we got to take a look at the data on the jobs report to go ahead and explain this. When we take a look at this from back in October, really what we look at is a September jobs number. So things were getting really good. Conventional rates were in the low sixes. FHA obviously was in the mid fives. Things were looking awesome. And then we've got some big blockbuster jobs reports. In September, 254,000. October was extremely weak. And then we run into November and December, and those were extremely high. And even on the revisions, they revised them even higher. So when we take a look at this back then, usually everything follows the trend of what the Fed fund rate. But when we take a look at it, when we talk to a lot of people, they say, hey, inflation has gone from 9%, basically sub 3. Why haven't rates followed? And this is the reason why, is because everybody's looking at the jobs number saying, hey, this could be inflationary. The more jobs that are out there, the more money that can be spent, the bigger problem that we got. So the other thing that we really need to take a look at is really the inflation report. So when we take a look at it, on top of these blockbuster jobs numbers, we also had blockbuster buster inflation reports as well in January and February. So we're coming off of this at the back or tail end of last year, and now we're working into this, obviously, since Trump's become president in March, April. We've gone through May. Obviously, we're going to take a look at June here soon. And so it's just coming to fruition right now. The big thing here is everything is looking extremely weak. Even on the last jobs report with the BLS, we were really close to getting another tenth of a percent higher in the unemployment rate. So what they're expecting tomorrow is some weak job numbers, the unemployment rate going up. If we can get a combination of both of those, obviously things are going to look good. But we've also been talking about the BLS Jobs Report for a long time, and how this report has really just not really been friendly to a lot of us. This report just hasn't been friendly to a lot of us for a long time. And then they go back and they revise them. So the BLS Jobs Report, really big numbers come out, and then they start to revise them backwards to show weaker numbers. And by the time the revisions happen, nobody cares as far as what's going on. We're set up. We were set up last month as well, too. So this is a little tough to talk about. But we're set up for a really good run on mortgage bonds if we can make this happen. If you can look at all these lines, we follow the mortgage-backed securities on the 30-year. If you take a look at it, all the levels of support are below where we're currently sitting right now. So if we get a really good jobs number tomorrow, obviously there's a lot of room to the upside and interest rates could take off, and it could be a really good thing. And when we take a look at the 10-year as well, the 10-year is below all the levels of support as well as far as the moving day averages, which is really good because we could say the 10-year obviously ripped down lower and we could see mortgage bonds obviously get a lot better and interest rates go a little bit lower. Obviously, we're going to have to wait and see what happens tomorrow. A lot of the predictions is that the unemployment rate's going to go up. Everybody's saying float ahead of this jobs report right now. So pay attention to that. Obviously, it's going to be a headline newser tomorrow. So check in, take a look at all that stuff. If you guys have any questions, please feel free to reach out. But if this is a great number for us tomorrow, obviously, this is another great piece of conversation to go to our sellers and also buyers and start talking about things could be changing here very soon. This is going to change the tone of Jerome Powell as far as cutting rates. That Fed meeting will be at the end of July. And so if we get a good jobs number here, we get some great inflation reports showing that inflation is not really moving at all or coming down a little bit. Most likely there's going to be some heavy talks of cutting rates later this month. So have a great 4th, stay safe, and it's a big month.